AI. What do you think about AI?
AI.
Like, what do you think about people not realizing what AI is?
And
they're getting tricked.
I think it's great. I think people who get tricked by AI should deserve to get tricked by AI because it's AI.
I got tricked by AI one time. He said that was AI, and I was like, oh yeah. And I said it really fast to like keep my dignity.
Yeah.
But
yeah.
Anyway, it's not going in the video.
AI. Remember that guy that was called? Remember 2 years ago? I think it was a year and a half ago. We were on the phone. He called us and he kept trying to sell this stupid AI product, and he kept saying it's AI. It's AI. The only selling point he had about his whatever software he was trying to sell.
Actually,
he kept saying AI.
Now he kind of was.
He was onto something. That was 2 years ago. That was still in the video. That was 2 stock splits ago. Because that was at 1 point, like $8 or $2 trillion market cap.
It might have been a little bit lower than that. It might have been. I think
it was around
like
1.5, 1.8. He kept trying to sell us to the video. AI.
Throw 100K and then that's 400K, folks.
Yeah,
I'm joking. I hate women.
AI. Also, too, AI. The AI, AI, TikTok, dude. I literally was on. I was using ChatGPT, OpenAI. This is some of the gurus. I'm trying to be a guru, a finance guru. Like,
so you're
I'm trying to help
everything.
I'm trying to help my subscribers understand AI. Like, I don't think you guys understand AI. You don't know AI. Like, I know it. Like, this is really like I've been meaning to tell you guys. When we start this channel, it was about trading, it's about investing, real estate, but like, you understand, we're also starting an AI sub-branch where it's AI is just, where something about what we're doing is AI. It's just,
you have to put AI in the keywords or you're not going to, nothing's going to happen.
I hear first, IA. Don't buy AI anymore. Buy IA. Intelligence Artificial. Buy IA. Jay, we gotta talk. We gotta tell everyone. Hey, what's up, guys? AMD. Hey, what's up? Where have we flashed AMD screen? Hey, what's up, guys? Welcome to the channel. In today's video, we're going to talk a little bit about FOMC, what just happened in the meeting today. We're also going to talk about Bitcoin Gold. We're also going to talk about the 18.6-year cycle and what we think is going to happen in the next couple of months in crypto and stocks.
AI.
AMD, NVIDIA, Lisa Su, chips.
We're done with that because we were talking about AI a lot, and we're done. Now, folks, we're going to talk about AI. So you said we're going to talk about certain things about crypto and the market. So what's going on?
Yep. I'm going to give you a brief rundown of what happened today. Jerome Powell had his normal tone. It wasn't too hawkish, wasn't too bearish. It was as expected. We got the 0.25 cut. Main thing that we got was the Federal Reserve is actually expected to end quantitative tightening by December 1st. I'll just give you a brief rundown of what QT is. QT is a runoff of the balance sheet. They are selling treasuries. In short, they are decreasing the amount of money that's in the system, the financial system. When they sell treasuries, there's less money to borrow from the U.S. government. And when that happens, the banks can't borrow, and that deletes money from the system. The transition to QE and what quantitative easing is when they're buying treasuries and they're adding liquidity back to our system, which makes it easier for things like real estate and gold and stocks to go up.
Yep. And that's why AI goes up. I'm going to say this really quick. I know if you're a new trader, it seems like the goalpost keeps shifting because you're watching it in real time and you're like, okay, we were waiting for certain things to happen and it happened. And then you're like, okay, why are things not going up? Why are altcoins not shifting up? Why is this not happening? It's because Powell was too late. So now it's like, okay, Powell's too late. Is he Paul Volcker? Blah, blah, blah. The last thing we're looking for is quantitative easing. So Caleb was talking about the difference between tightening and easing, but the main thing we're looking for now is easing. We're not even looking for basis cuts. He just did one. What is the market doing? What are altcoins doing? Nothing right now. They actually went down. They kind of stabilized, whatever. But the thing is, we're waiting for easing, and that's just a quick little, when you're like, I thought we're waiting for basis cuts. Someone was just talking about this earlier, because I talk about crypto here and there to just friends and family, and they were asking why, okay, we got a 25 basis cut. Why didn't everything pump? The goalpost has shifted, and people like me and Caleb are studying the market, and then we're calm with what's happening. We weren't expecting 25% basis cut, everything pump. Not at this point, because now we want easing. Now there's certain things that have to happen for other things to happen, and it's all timing. Market's trying to predict certain things, and now the new thing is this. And once that thing happens in a certain timing, everything will be good and it's going to pump. And they will do it because guess what? The United States of America has a track record of making sure we don't go to zero. So the reason I'm bringing this up is because when it keeps shifting and you're waiting, sometimes you might sell. If you sell your bag before it goes straight up to the sky, you're going to be a little bit frustrated. The reason you're going to be a little bit frustrated is because you were trying to understand why it took 1, 2, 3 years. You were studying and you figured out, okay, this has to happen, this is going to happen, this has to happen, and this is going to happen. It's not checkers, it's chess. So you're like, you have to think in so many different variables that you're like, that's why this didn't happen. This is going to happen. If this happens, that's going to happen. You have to really start thinking about the different playing field of what's happening in the economy. The stock market has a really annoying way of saying, this already happened, what's next? So basically, you were supposed to already know we wanted a 25. When that happens, it's not exciting news. But the 25 basis point cut was exciting 2 months ago. It was exciting 3 months ago. It was exciting 4 months ago. So you have to always be perfectly aligned with today's expectation in the market.
Expanding off that a little bit more, there are actually two key economic indicators that I pay attention to. What I like to do is I like to take the academic approach. I mean by that is a lot of people just say, okay, I'm going to buy this day and I'm going to sell this day. But what is more prudent is actually to take historical data, compilation of data points that can prove that thesis instead of trying to sell at a specific period of time. And so, example, there are two economic indicators that I like to pay attention to, like Bitcoin, gold, and the ISM. Bitcoin has never ended a cycle where gold was outperforming at the peak. So you can look it up on TradingView. It's called BTC divided by XAUSD. And what this shows is the Bitcoin ratio versus gold and whether or not these two asset classes are underperforming and outperforming each other. And right now, gold is outperforming. And so what I'm expecting is that Bitcoin is going to catch up, and this will mark a sort of another cycle peak indicator. Another thing that I've been tracking, ISM manufacturing data that is comprised from multiple small businesses, large businesses alike, compile data to find out whether or not these businesses are spending a lot of money, whether they're hiring, whether they're firing. If the majority of these businesses are actually contracting, the ISM will remain lower or remain flat. And if it's expanding, the ISM chart will start to go up. And so right now, the ISM is actually relatively flat. That gives me a more of a theoretical basis to make the conclusion that Bitcoin hasn't necessarily topped yet. The last thing I want to mention is the fact that, remember, Bitcoin's 4-year cycle is just actually an average, right? When it comes to averages, you have to realize that it's not a set in stone thing. This cycle can run for 1,200 days, and the last couple cycles only ran for 1,050 days. And the reason why I say this...
it's an average.
It's an average.
Yeah.
And the reason why I say this, in 2008 and in 2012, there's a typical 4-year cycle, but 2013 was actually interesting because Bitcoin actually had another peak even following that 2012 cycle peak. Could be a similar situation playing out where everyone's expecting Bitcoin to top at a specific year, but it actually could run maybe 6 to 12 months later, and that is due in part because the 18.6 to 18 to 20 year cycle where things could run slightly longer than usual. And so it's not uncommon that Bitcoin could run a year later because it actually has happened before in the past. The first ever cycle Bitcoin had, it was actually a 5-year cycle, is what people don't understand.
I never asked you this before. When are you going to say, okay, this piece of data, this data set, these things didn't line up? When are you going to throw your hands up and be like, all right, I think I'm going to move to preservation instead of a bullish theory on this particular cycle? Because I'm going to move to preservation.
Yeah, so I think it's not a matter of throwing the towel or giving up per se. What I'd like to do is actually think of it in terms of a risk-adjusted return. So say, for instance, data points like we were mentioning before, the ISM, Bitcoin, gold, things like the 18.6-year cycle, our thesis don't play out. You know, it's January, February, spring 2026 is there's something that's called a Sharpe ratio. And what the Sharpe ratio means is you're actually maximizing your upside while also minimizing your downside risk. And so I'm actually going to move 25 to 50% of my altcoins into Bitcoin and move the rest into things like dividend stocks and real estate if I don't see our thesis playing out. Again, we said maximize your upside return while also minimizing your downside risk.
That's actually one of those things where I randomly was asking you. I was like, okay, I just wanted to know because I talked a little bit about this is exactly when I'm going to be done, you know, trying to address basically the timing issue. You answered it in like an actual analytical way, which is cool because I'm like, all right, you're talking about I'm not going to just look at it in a certain way. I'm going to basically take this, you know, you said Sharpe ratio and actually proceed with the data. But so you're not going to throw in the towel whenever. And that's for me, I struggle with that a little bit because at some point it's like 2027, 2028 and certain things are happening. I'm not trying to turn into an interview. I wanted to ask that question because I was like, wait, I'm at the point where I'm looking at the data and I'm gonna basically sell at a certain point.
And that's one of the reasons why in this channel and in this Discord community, what I want to do is stress the academic approach, because what a lot of people do is they try to, remember, again, timing the market is better than timing the market. The most prudent approach is to look at everything. What is your maximum risk adjusted return? Because when I think of things like gold, when I think of things like real estate, the only reason why people invest in these things when people comprise portfolios is to hedge specific economic theses that might play out. Some people invest in gold because they think stagflation could happen. Some people invest in real estate because they think that the normal inflation could be happening, not just stagflation. And some people invest in stocks because they think that money printing could run rampant. So there's all these different factors that you could play into someone's portfolio, and that's the reason why you want to have a basket of assets so that you can protect yourself and use the Sharpe ratio to your advantage. Make sure you guys stay tuned because I'm also going to be releasing another video where I go over things like the Bitcoin gold chart and also the ISM manufacturing PMI. So stay tuned for that.
Awesome. BullTheory Project, we out. I'm tired. I got to wake up tomorrow.
AI.